Hey everyone, today is April 9th, and today the stock market closed up 297 points on the Dow, 31 points on the S&P, and 70 points on the NASDAQ. And this is close to a really great week of record highs. And so the question is, are we going to continue higher, or are we going to see a pullback next week? And before we answer this question and do our analysis, please read this disclaimer, and you can pause this video as you read it. Okay, so this week was a really great week for the stock market. This is the S&P. We're looking at the SPY ETF, which tracks the S&P 500. And so we opened the week up, gap up, right? And we basically were muted on Tuesday and Wednesday, and on Thursday and Friday, especially Friday today, we pushed up pretty hard. So the market overall had a great week. As you can see, this epic weekly candle pushing up higher. So over the last couple of videos, I've been talking about how I'm very bullish on the stock market in the long term, right? I talked about how we're in a secular bull market, right? This long-term bull market. Even with the crash during the pandemic last year in March, still we recovered very quickly with this incredible historic V reversal recovery, right? And so in the context of the last 10 plus years, since 2009, we've been in this long-term secular bull market with some pullbacks from here every now and then, right? But right now, the moving average is still looking very bullish, right? So the question is, are we going to continue going higher, or are we going to see a short-term pullback within this longer term rise in the stock market? And in previous videos, I've also talked about how in a bull market, we want to see the price go up at a sustainable rate, right? We want to see it pull back every now and then to these moving averages so it doesn't go too parabolic. Because when the price goes too parabolic, like it has, say over here and over here, we tend to see a pullback, pretty sharp pullback, right? Because these moving averages, they kind of operate like a rubber band, right? When the price goes too far away from these moving averages, it tends to snap back. And sometimes it'll overshoot to the downside, but eventually it'll, kind of like we saw last year, right? We saw the price come down pretty hard, overshoot to the downside, and then push back up, right? The price tends to want to, in a bull market, stay close and hug these moving averages, right? And so here at the silver line on the daily chart, we see our 50-day moving average, which is our short-term support, the 100-day simple moving average, which is our mid-term support, and the longer-term support, which is our 200-day simple moving average. And usually in a bull market, historically, we've seen the price come down every now and then to touch the 50 or the 100-day moving averages. Once in a while, it'll touch the 100-day moving average, sorry, the 200-day simple moving average, but the 50 and the 100-day, the silver and gold lines tend to act as very strong support in a bull market, right? And we talked about how it's okay, it's very healthy to see the market go up in a sustainable rate, right? Up, down, up, down. Like the saying goes, the stock market takes the escalators up or the stairs up, but it tends to take the elevator. When it comes down pretty hard, and it grinds slowly higher, right? And so right now we're at the phase where we're starting to see a bit of the price getting a little too far ahead of itself. And in the last video, I talked about how if we don't come down and fill the gap that we made on Monday and touch this moving average, we might see this go up a little bit more over the next couple sessions. But we're increasing the probability that we might have a stronger snapback, right? And a good example is what we saw in early September and in October, where we had the market sort of getting ahead of itself, going nearly parabolic before a huge snap down, right? Same thing in October, and you can see how we had some gaps over here, and those gaps eventually filled when we came down pretty hard, right? And bounced off our midterm support level at the 100-day simple moving average. And so the fact that we're basically pushing up higher on Monday, that makes me believe that next week we might see a parabolic run, right? And we might also see a snapback that might come down and fill this gap between going up higher. And I like to see this thing come down and revisit the 50-day simple moving average like we have in the past here and over here. And I think that would be great long-term support, or great support for us to continue higher in the long term. If we zoom in, we can see this a little bit more clearly. These gaps usually do fill, and they can take varying amounts of time, right? For this gap, it took only a couple of days for it to come down and fill. But in this most recent gap in early February, we had a gap here, but it took an entire month for this thing to come down and finally fill, right? So it's possible we might see the market, this gap over here that we made on Monday, we might see the price go up for a while and then come down over the next month before and filling this gap before going up higher. So just keep that in mind, right? I don't want everybody, like I've said over and over again in previous videos, that I am very bullish on the market in the long term, right? I just said that we're in a long-term secular bull market, which I expect to continue the rest of this decade. But we can't just assume that the market's just going to keep going up. Like the nature of the markets in a healthy bull market is to come down and revisit the moving averages, right? I know I'm repeating myself, but it's very important to reiterate, right? So it's very the probability is very likely that we'll see the price go up and then come down and revisit these moving averages and probably fill this gap, right? Now, of course, the market doesn't always have to do that, but if we look at history, it tends to rhyme, right? There's that saying that history doesn't always necessarily repeat word for word, but it does tend to rhyme, right? So it's important to look at the risk factors, right? Because I don't want anybody going leverage long here when this thing's going parabolic, because if you went leverage long here, you would have been wiped out, right? Wiped out here, wiped out here. So just to keep that in mind, I know that everything's looking very bullish right now, but usually when the market comes down hard, it's usually when people don't expect it, right? I talked about how on Monday's video how the VIX was rising as this thing was rising, and now the VIX has come down a little bit. But keep in mind that even though we filled this gap that we made in March during the pandemic last year, we do have a down gap that we have. And usually these gaps will fill, especially on the VIX. The VIX likes to take its time while it's moving down. It likes to go sideways, right? It likes to go sideways and play with the market, tease the market, tease the retail traders, and this thing will push up higher. Very likely that it's going to push up higher before it goes down even more, right? And that's going to put more downward pressure on the markets in the upcoming sessions. Something interesting also, somebody's betting big $40 million option trade that the stock market's going to go down. So somebody bought a bunch of VIX calls, but in order for them to make money on this, the VIX needs to rise by 25 to above 25 by mid-July, right? So if we look at the VIX again, right now we are $16. So the VIX needs to rise above 25, which is this level, 25. By July, right? So of course that doesn't necessarily have to happen, right? People make big bets all the time, and this could just be a fund who's hedging their bets for their long position, right? But as we've seen historically, whenever the VIX gaps down, it tends to fill, and the VIX likes to go sideways, as we just said, and we might see a short-term spike up there, giving that person a nice profit. But of course, that also means that the market will likely see a nice pullback as well. Now, of course, that could be a great buying opportunity. You're going to have to make that decision for yourself. But for me personally, I'm not going to chase. If this thing does go up hard next week and we do see a big pullback, I'm personally going to be waiting for this pullback to the 50-day moving average. I want to see this thing pull back, touch the moving average again, and that to me would be where I personally would buy, right? Of course, you got to do your own research and make your own decisions. This channel is just for entertainment and analysis. This isn't financial advice. But for me personally, I'm not chasing this market. And now, if you're thinking about chasing this market next week, if it does go up higher, there's gonna be a lot of excitement, of course, right? It's gonna be all in the news. Like the market's going to all-time highs. Things are looking good. But so was it here as well, and here, right? Same thing. History doesn't always repeat, but it does rhyme, right? When everybody starts chasing in, that's when the smart money, like we just saw over here, this guy buying VIX calls, $40 million. That's when the smart money comes in and bets against the retail, right? The dumb money, as they would say. And then that's when the retail people get wrecked. So just keep that in mind, that the smart money is starting to place bets against the market, especially if it starts to go parabolic next week. We want to look out for the VIX. If the VIX starts rising while the market rises next week, the S&P, that's usually going to mark the short-term top, right? Of course, long-term, I am bullish on the market. As I've said over and over again, but in a healthy bull market, we have to expect these prices to pull back once in a while, right? We want to see a sustainable rise, no parabolic moves, otherwise that could lead to a sharp correction, right? But either way, for me personally, I'll be waiting to buy any pullback, right? Any pullback to these short-term moving averages, which have acted as strong support over the past couple weeks, right? And especially down here. So that's it for the market today or this week. Of course, we had a great week and things are looking really good. Vaccines next week are going to start to be available for the general populations, not just for the older population. So I'm expecting this recovery to progress even more and for the market to hit all-time highs over and over again, perhaps surpassing 500 on the SPY or 5,000 on the S&P by the end of this year. Of course, I'm going to keep you updated on possible risk factors such as pullbacks or corrections along the way, because it is going to happen, right? It's not, the market isn't going to go straight up, and we try to be as objective and unbiased and realistic as possible on this channel. So I'm not trying to be a hater. I'm not saying the market's going to crash, right? I'm very bullish. We're in a secular bull market. All I'm saying is that be careful when the big money starts betting against the retail, right? When the big money starts betting against the retail, that's usually when you want to be careful, because there might be a short-term pullback. So I'll update you guys again next week, and we'll see how the market progresses from there. Now, if you found this video helpful or informative, please like this video, leave a comment below, and subscribe for updates. Thank you all so much for your support, and I'll see you next week. Thank you. Bye.